Good morning and welcome to the Trading the Text show for Tuesday or Wednesday, September 9th, actually. Sorry about that. This 12 o'clock time is kind of an interesting time frame because you're trying to get prepared and you're like, what day is it? But when you start speaking, it actually is a different day. So it's going to take a little while for me to get used to. But once again, it is Wednesday, September 9th. You are viewing the Trading the Text show. This is a brand new show for me. This is our second night on the show. So what we do on this show is go over the actual charts. We look at the technical indicators, we look at the price action, and we look at trend, and we try to find out what might be the best trade to take for us throughout the day. Trades that we might look for, things that we might stay away from, and the reasons why. I'm very much a minimalist when it comes to trading, so you're not going to see me do really, really complex things. I'm just not a big proponent of that. I don't believe that it should take you forever to analyze your charts and find out what it is that you want to do. I like simplicity, and we've got a lot of newbie traders who need simplicity so that they can stay disciplined, because one of the major proponents of being or components of being a trader is actually being disciplined and learning to do things when they should be done and learning not to do things when they should not be done. So if you have a pretty strict list of things to do and you create your strategies in a simple way, then it's very easy to tell whether or not you've got a good trade going on or a bad trade. And, like I say in my other shows, the gauge for a good trade and a bad trade is not whether a trade makes money or not. The gauge for a good or a bad trade is going to be whether or not you executed the strategy and you had a solid reasoning for entering the trade. So that's something a little bit different that we're teaching here, or something at least I want to stress to the individuals that come through the doors of iLi Academy. Because I think that's important. I think it's extremely important to get the right psychology down, to get the right mind frame and the right outlook down before we ever touch even our first trade. So I'll always preach these things as we go along so that you guys can start developing that same philosophy, or at least taking pieces and parts of my philosophy, developing your own according to what you see, and trading your own trading plan. So let's jump into the charts here. It does take a little while to kind of get through the charts. So I'm going to go ahead and take a look here. I do a show again at 6 a.m. in the morning. So 6 hours apart, a lot of this, gets redundant for me, but I know a lot of you may not actually attend that particular show. So we will definitely talk about what we see in the charts here now versus what we saw in the last day or so. So I'm just going to go through all of the charts. That's pretty much the standard way I'm going to do things, because there's so many charts. I'm just going to go one by one through the charts and try to give you my best commentary on those particular scenarios. Okay, so we're going to start here with the Aussie CAD. This is our daily chart for the Aussie CAD. What we were talking about here, I know we were talking about doing a breakout bounce trade because I've got my rectangle drawn here. You can see the kind of this light blue rectangle on the screen that represents my entry points where I'd be interested in getting in at. So with that, we looked at the breakout bounce here. We had this move here to the upside here, up here around 96.74.5. And then we fell away from the high, but we came right back around to test it. We didn't break the high again. So we actually came up short of the high. We came really close, but we came up short of the high. And then the idea from there is that we're going to trade away from that level because the level was rejected. And many times this is a pattern that we see that occurs. So is it going to go straight down? Obviously not. It does, sometimes it will go straight, but other times, and most of the time, it's going to bounce around a little bit, as traders will be unsure whether or not they really want to leave this level. If there's orders and things that are sitting over there and there seems like a lot of interest in that area, then they'll stick around for a while, just bounce around taking some orders, and then figure out a way to move on. By then, the sentiment could change. You never know. So it could continue on to the upside and break out. But this is the strategy itself. So we take the strategy according to what's written, right? So we would have taken a short at the worst point, maybe here at the bottom of our blue box, which is kind of right here, right around the 95.25 area. So that would have been our short goal here. Now, we also have the Fibonacci that's drawn on here as well. If we're taking the Fibonacci trade, then we're getting in here on the 23.6 level. It hasn't really changed. We don't have a new high here, so the Fibonacci is still drawn in the same place. If you don't know how we draw the Fibonacci, we draw it from peak to valley and valley to peak. So we have this low here, that's the last low. This is the last high. We draw from the earliest one to the latest one. So we'll go ahead and select here because this low is the latest one. We'll hold it down, we'll draw it up to the top and let it go. And it's gonna give us these beautiful lines here, which are showing us the percentage of the retracement if this price comes back. What percentage is it coming back at? And then we're looking at the 23.6, the 38.2, the 50, and the 61.8 as entries and targets. Okay, so that's generally how that works. You're going to see that a lot here, so I'm not going to keep going over it. But the idea here right now is maybe the breakout bounce to the downside. If we come back up and test for a breakout here, then maybe we break out above the resistance point. And then that's a different trade for us. That's a different opportunity. There's more than one way to win here. Some people don't like to trade against the trend based on a possible reversal. So they want to trade along with the trend. So you've got two options there, right? Looking at the Aussie yen, we can see monthly we're down 2% now. Weekly we're down 1.07%. On the day though, we're up 0.03%. Compared to where we were. This is a daily chart. You can see that we've got kind of like this hammer candle that's developed here. It's got a long wick on the bottom, and then on the top, let me see if I can hide this. I've got some controls up at the top. I need to hide those so I can see. And then I can zoom out for you guys. Okay, so here you go. You see this hammer that's developed here. This typically is going to be a reversal type candle. Where are we at right now? We just started the hour really, so this is kind of a brand new candle for, the day. So we're not in the hour, we're on the daily chart. So this is a brand new day chart for us. So what we've seen was a move down here to the bottom, but then the sellers couldn't hold on, and the rate was bought back up to just within where the candle opened. So we've got a little bit of body there, very small. It's very much near the top. That tells me a reversal, and maybe we're going to head up here and look at the resistance that we found up here a little bit above 78.21. So that's what I think is going to occur here, just based on the appearance of this hammer candle. Even though we got some moves to the downside, I think that's going to exhaust itself and kind of continue on to the upside. We're going to maybe at least test the resistance. If we don't break the resistance, then we're looking at maybe a breakout bounce trade to the downside. That's a very strong possibility for us. So I'd be watching that one right now. I don't think that I would take that order. If I was going to take anything, I'd probably stick my short order out here on the 23.6 for the Fibonacci retracement. But then I'd be watching that to make sure that it doesn't go against me too much if this 23.6 holds as a support and it bounces away, right? My stop's going to have to go outside the high peak, right? So somewhere above this 78.45 mark, my stop has to be up there beyond that, because anything within that is in range to be hit, right? Let's look here at the Aussie New Zealand on a daily chart. If we look at the Aussie New Zealand, for the last 3 days, we've gotten some green on the screen. You can see that recognized in our daily change here. We're up 0.07%, actually. It's fluctuating there, 0.06, 0.07. For the week, we are at 0.69%, so a little over 0.5% there. For the month, though, we're still down a little below 0.5%. We're down 0.43% right now for the month. We can see that we had these nice big down days for these particular candles, but now we're retracing some of that. So we are kind of retracing. Looks like we've got 3 green candles growing already. We had this doji here in the middle, in the middle of these two red candles. So that was telling us that there possibly could be a turnaround here. So once we got that doji, all we've really seen is movement to the upside. There's definitely been some buyers in there because we can tell by the wick of this particular candle, the next candle after the doji. Let's make this a little wider so you can see what I'm saying. This is what we call a doji because it's got almost no body whatsoever. And it's kind of, they're almost in the middle of the two wicks here. I mean, neither the buyers or the sellers were in control. That typically tells us that the sellers have kind of run out of steam here because we were headed down. They've run out of steam and we're going to go the other way. So that's one of the candle patterns that we'll see sometimes here, especially this one. You don't see it a lot, but it definitely does occur. This is almost a perfect doji, but we've got this hammer that's developed here too. We've got a bullish hammer that developed here too. And it looks like, for the last 3 days, we've been moving to the upside. So I think that this continues. I don't think that it stops here. We do have a little bit of a trend line, maybe, kind of going this direction for us here. You can see that we're kind of hitting that trend line. We were respecting that on the way down, but now we've kind of hit that on the upside, and we're going to find out whether or not that's going to impede us from going further from where we are right now at this 109 level. So if I'm looking at this for a trade, I'm looking at maybe a trade to the upside. That's probably, if I'm looking at it, the best trade I can think to take would be to the upside. All right. Let's look at the Aussie dollar. On the Aussie dollar, we see that we've got a little bit of green on the screen for today. So up right now, we're up 0.11%. But for the month, we're down 2%, 2.08%. For the week, we're down 0.8%, almost a full one. So we're going to see what happens with this. We've got a little bit of green on the screen. We don't know for sure what's going to happen from here. Looks like we're at the top of, the candle at this point in time. I don't know if today we have the appetite or traders have the appetite to push that even further. But right now it does look a little bit bullish, because this is a bullish pattern. This hammer is a bullish pattern for sure, a bullish candle. And we'll see if we can eclipse even half of this previous candle. It's a daily candle, so it's bigger than if you were just trading like a 15-minute or something. I do kind of have the same philosophy on the lower charts about this candle, the current candle, breaking maybe half, at least, of the previous candle. If it doesn't do that, then my idea is that we're probably still not changing direction. But if we can break the body of the candle, we for sure probably are going a different way. That's typically how, just in the back of my mind. It's not really a strategy or anything that I'm using. It's just something that I keep in the back of my mind when I'm looking at candles for where we are right now. It gives me some perspective, like, okay, how much of yesterday's move have we covered? That's something that will be in the back of my mind. Just little things that I'll think about as I'm going through and doing analysis. It doesn't take a long time to see it. You can look at it and go, okay, we didn't even touch half of yesterday's candle. So are we really going to the upside here? Is this just a breather? So just because the candle's green doesn't mean we're going to the upside for sure and that we should just dump an order on. What I see here is that we're still in a downward trajectory. I see that we're probably, coming up on some what used to be resistance right around in this area here, right around that 72.38 area. We're seeing some resistance there, but now we're going to find out whether or not that's going to be a support for us. We'll call it 72.40 for a nice round number. We'll see if that 72.40 is going to be a nice, resistance instead of, being a support for us at this point. Looks like we've fallen through that level and maybe we'll continue to the downside. Might get a little breather, but I think we're going to head to the downside here. We've definitely seen some weakness in the Aussie versus the dollar. That has a lot to do with the Dow. I did mention that, I think on this morning's show, on our first show, about watching the Dow, keeping an eye on that because the markets tend to be correlated to the dollar. So the Dow and the dollar kind of have an inverse relationship. And so when the Dow is screaming up, the dollar is getting pummeled. Now that the Dow is getting beaten down just a little bit, now we start to see the dollars start to gain some strength in some of these pockets. And it's about time, really, because we were down, 2%? The dollar is down 2% through at least the last couple of weeks. This is a record low for the dollar. And so it's been getting weaker and weaker, but it's not going to stay that way forever. It can't, can't do that in a straight line. So it's going to have to bounce back and forth. So maybe right now we're just kind of getting that little bit of breath, and then traders will figure out where we go from here. But if I'm looking for the Aussie US, I'm looking for maybe maybe the Fibonacci. I'm going to look and see if maybe we come around here and test the high again, maybe for an opportunity for a breakout bounce. So those are the two strategies that I'm really going to push right now. The reason for that is because I want you guys to start learning at least a couple of them to see it over and over and over again, so you know exactly how to do it. And then we'll add some more as we go. As we do these shows, we'll start to add the 38 special, or we'll add the catapult trade. I think I want to go to catapult next because that's like one of my favorite little strategies too. So I think we can adopt it for here. When we were doing that before, we were doing it on like a specialty software that was written by the company that I worked for at that time. And they had a little bit different time frames and things that they could use. Like they had a 90-minute chart that you could use, which was kind of cool. But we don't have that 90-minute. That's been always the issue that we've had with MetaTrader doing that particular strategy. We only have an hour chart or a 4-hour chart. And so, I have to look at it and just see whether it translates really well. But I think it's still a great strategy. It was used prior to Forex in the market. So stock market and for a guy that we knew that was working on some funds, mutual funds and things like that. So this is it's a strategy that can be interpreted for Forex as well. And we've had great success with that in the past. But looking at the CAD yen here, we know that we've got all red on the screen down here as far as our changes. I like these numbers because it's very easy to see what direction we're going in. So if you have to second guess about what's going on in your charts, you can look down here, glance real quick and get real fast perspective and very good perspective on what direction we're going in. So when I see all red, that's telling me that we're headed down. So even though we've got this trend line going here, we had that trajectory to the upside. Right now, it looks like we're all red. The month just started, so we're down about 1.38%. For the week, we're down 1.58%. So that means that we're accelerating a little bit, even into the monthly change. And then for the day, we're down 0.07%. We've got a little bit of a pullback that happened here at this 23.6 mark. So we're going to see if this 23.6 kind of holds, or do we continue on down to the downside here? We see that we fell off quite a bit here throughout the day yesterday. So if I'm taking a trade in the CAD yen, I'm looking to see whether or not we're going to, reverse and touch this trend line, find out if it's going to be resistance. But right now, it looks like we're headed to the downside, right? Everything here is telling me to the downside. Looking at the Swiss yen, kind of the same story, right? Look over here in our bottom left-hand corner, everything is down. Monthly, we're down 1.5%. Weekly, down 0.72%. And then you look at our candles, they're all red candles here. We've broken out of this trench that we're in, this trench kind of to the upside. And now we've kind of broken below that. We've actually hit the 23.6 mark. So if you were taking the Fibonacci retracement trade on this particular pair, the CAD or the Swiss yen, then we would be in this 23.6 entry already. And then our 38.2 is out front. And then we'd have our 50 and our 61.8 as our targets. So these are longer term developing trades, especially if you use like this daily chart. It's going to be a longer term developing trade. It might be 2 weeks before it hit that 61.8. So you have to have a level of patience with the trading. You have to be really ready to kind of wait it out to get your pips. But these trades will generate a lot of pips for you. So the hardest thing is just having the patience to kind of wait it out and not getting antsy and having to touch it. A lot of times traders just have to put their hands on the trade and they just get antsy after it's been there for a while. And if you look at it all the time, then you feel like I have to do something. It just kind of eats at you, even almost subconsciously. And you end up making a move because you justify it in your mind. You're telling yourself, oh, I think it should be done this way, or I think I should do this, and I think this is what's going to happen. And then so I need to act. When really it's just you being a human and being a little bit antsy and not letting the trade itself just develop. but it's just like a cake. You know, you stick it in the oven, you let it bake, right? You don't want to take it out halfway before it's done, because then it won't be good done inside, right? And it won't be good, and you won't like it. So you have to kind of let it go until it ends. You know, so just like your food, same thing with your trading. You take care of it the same way. Let's move on to the Euro Aussie. Looking at the Euro Aussie, we had this nice move down here back through the end of August. And then we started to bottom out, trading a little bit lower lows, but really off to the right in this section here from about August 28th through September 3rd. Then we got this nice bounce here versus the Aussie dollar. And we've just been bouncing ever since, right? So this is great for us. This type of action in the market is wonderful for us, because especially with our auto trader, because it's going to take these signals and take, you know, similar signals to these, not these exact signals, because it's a different indicator, but it's very similar. It's going to take these signals and just kind of trade in those directions. So that's always good for us when we start to see this bounce. We don't really like these long trending moves, because if we're in it the wrong way, then it hurts. But if we're in, you know, these volatile bounces here, we can always kind of recover. Even, you know, even if our trade goes errant at first, we're going to recover and have the opportunity to make money on that particular trade. And that's why we don't get out too quickly. But looking at this particular trade here on the Euro Aussie right now, we've definitely got some weakness. We've got 1, 2, 3, 4, 5, 6 red candles, 6 days straight of red candles. We look like we're getting a little bit soft here on today's candle. And then for the month and the week, so far we're up a little bit. So if I'm looking at this, I'm going to watch and see what happens. Do we go back here and test this 100% level? Or do we pop past that level, right? So the Fibonacci that we have drawn on here is from this particular signal to this signal. So that's why the numbers are going the opposite direction to the upside, right? So we're looking to retrace this particular move here. Not this leg. This leg is where we would have got in at the 23.6, the 38, went right to the 50, right to the 61. You know, it went all the way to the 100 actually, because it wasn't that large a move compared to some. So now we have the opportunity to maybe create a Fibonacci going the other direction, right? So let's do that. Let's go here to the object list and let's draw that in. Go take this Fibble off, delete. I'm going to go grab my Fibble retracement tool, which is going to be up here. See my little lines there? It's telling me that it's ready. I'm just going to click here at this bottom signal, drag it up to the top signal, and let go. Doesn't have to be pinpoint accurate. It has to just be really close. You're going to do all right either way. So I'm not the kind of trader that's going to teach you that you have to have pinpoint accuracy on everything you do. I'm a little looser than that. So, you know, you don't need to be extremely accurate there. You know, there's a lot of traders that stress themselves out with that. I just don't think it's necessary. So we're sitting on this 23.6 right now for the retracement to the downside. So we'd be able to get into this trade now. If you want to be conservative and wait to 38.2, you can do that as well. But your 50's out here and your 61 out, 61.8 is out here as your targets, right? And then too, 100 might be in play too. This 100% line might be in play too once we hit that 61.8. So you may want to, you know, just break even or break even plus some pips. If we pass the 61.8, lock in what you can, and then let the rest just run. That's the beauty of it. You just let it run, right? Let's look at the EuroCAD. We were talking about doing a breakout bounce trade. This is kind of a big one here because it is a daily chart and it covers a lot of time. But we're talking about this top, you know, this square here, or the rectangle, I'm sorry, this blue rectangle being like our entry points anywhere in there, but this would be the earliest point for the entry to this to the south, and this would be the latest point of entry to the south as well. So we can see if we went early, we'd already be in this particular trade. We would have got in maybe right up here around 156.36 or so, and now we're down here, looks about 155.88. And we even bounced. So we were down at 154.41 or so. So we almost, you know, would have made 100 pips on this move down so far. But we haven't eclipsed even, we're still not out of the water yet because we, you know, we're still in an area where we could still short this thing. As far as the Euro CAD though, looking over here, like I said, it's good to get real perspective because for the month, we're up 0.11%. For the week, we're up 0.84%. And for the day, we're up 0.04%. So all of that green on the screen is going to prevent me from wanting to stay in this particular trade because I feel like it may just head to the upside. So that's the second part, of that. So I see what the opportunity might be, but then when I'm looking over here, I'm like, maybe that's going to be out front for us. Maybe the trend, the way the direction of the water is flowing is not the same way my brain is tricking me to think that it's flowing based on looking at the chart. So this is real actual numbers, and it's looking back at a certain percentage of time, and it's saying, okay, this is the direction we're going in. That's why I really like that on the screen. I'm going to put that on the website too. I'm going to put that indicator on the website so you guys can download it and keep it. I'll have a page with like indicators that I'll use and things like that. As we find things, we'll put it on the website for you to actually go and download it and implement it. Looking at the Euro Swiss, we said that on this daily chart, we are in the channel here. We're headed on the way to the upside here, just kind of slowly meandering to the upside, but in a very tight channel. We see a lot of trading happening between these two lines, the support and resistance lines. Right now, we're kind of in the middle. So I don't really have a prediction on what's going to happen with that. It can very easily come down here, test the support. If I'm interested in buying, I'm going to buy at support. And then or if I'm interested in selling, I'm going to sell at the resistance level, this trend line up top, because we're staying kind of in this range. Now, it can pop out at some point. So at some point, that's the expectation, is that it's going to pop out, and we're going to have to figure out where we're going from there. But for right now, this is what I see as a pattern. So if I'm looking to buy here and to sell here. Okay, let's look at the euro pound. Euro pound has broken out of its trend line. Look at the trend line that we draw. We saw this bit of a trend line here. We thought, is it going to continue downwards? But it looks like now we've broken out of that quite handily. We've got a lot of green here for our change numbers. Doesn't look like that's coming back. So my interest here is to the upside. Just purely on the action that we see here right now, I'd be interested in a trade to the upside. Looks like we're going to get some resistance right about in here. Average about 91.20 or so, 91.20 to 91.30 or so. There's probably going to be some resistance, but once we break past that, then we could be looking at a move all the way back to 94.83, or at least close. Right? So that's a nice big move. That's a lot of pips for us. Even with a small trade lot size, that's a lot of pips for us. Might take some time, but moving in that direction, you get a few hundred pips. That's great. So that's what I'm looking at for the euro pound. I'm looking at a buy. For the euro yen, we got a lot of red down here on the screen. We're down 1.29%, and for the week we're up we're down 0.76%. So if I'm looking at any type of trade here, I'm looking at a retracement trade. I'm going to go ahead and take this off, this fibble off, because I think it was based on a different time frame. And then I'm going to draw it from this bottom to this top. Oh, so maybe it was right. Okay. But we're coming down here to the 23.6. So my order would be out here ahead of the 23.6 and then at the 38. That's where my entry short would be. Everything is red, so that kind of confirms what I'm looking at here. This move to the downside, so that's the way I would trade the euro yen. On the euro New Zealand, we talked about this Fibonacci extension yesterday. So we drew an extension based on this trade here. So we're looking at continuing on down, but we did retrace a nice piece of this move here, this move to the downside. We didn't quite hit the low that we hit before. So we're going to see how this really turns out. Yesterday was a good day for the euro versus the New Zealand. Today it's showing some green again. So we're going to see if the fundamental news pushes us around a little bit. And if it continues to the upside, okay, fine. But if not, then I'm looking for an extension down here to the 61.8. Maybe it's just improving my price for me right now for my entry. So I don't have a lot of, I don't have a strategy or whatever that really fits this, except for maybe the extension. So if I'm going to get into this, I'm going to get in maybe at the 61.8 and then look for at least 100 for my take profit, right? Something maybe short, you know, break it even and then let it run. You know, that's probably the best way to handle that. Looking at the Euro US on this daily chart, we've broken down below the support line that we drew here. So we're going to find out whether this is going to hold as a resistance at this point. For the month, we are down 1.32%. And then for the week, we're down 0.5%. But for the day, we're up 0.04%. So there is some willingness to buy at this point. So we don't know for sure whether or not this is going to be, this is going to continue to close below the trend line or if it's going to get sucked back into that channel. So it's really going to probably depend on the US dollar, any news that's coming out of the US dollar that affects the euro as well. We'll see what happens there. Pound Aussie, right now, negative, right? We're seeing a lot of negativity for the pound. So we're down 0.93% right now for the month. And then for the week, we're down 1.5%, 1.54%. There's nothing about this that says that it's going up. So if I'm taking this order here, if I'm taking something small right now, I'd short this, you know, short this into this support line here, see if we can fall below that. If not, then I'm looking at a breakout bounce. I still got a ways before this comes down and tests, but I can kind of draw my box in there because I can see it kind of forming already. So I normally like the top of the box maybe to be right around this support level in here. So I'll draw it like this. And I like the bottom not to be too close to where I don't like it too close to here, this low. You know, I just like it to be a piece of that. I like it to move my direction before I would get involved. So I'm not going to buy here just because I reached this level. This is my early entry on the way back up. So I'm expecting price to come down, hopefully get below this level, and then I'm an interested purchaser when it gets to this level, or maybe this level as the last resort. So on the pound Aussie, that's what I'm looking for. Short term, I'm looking for a short. Long term, I'm looking for a long. That worked out pretty good, huh? So the pound CAD, let's take a look at that. We see that we have gone ahead and reached the bottom of the trend line. We've reached our support trend line. So we're going to see if this trajectory continues. Do we break out below the support line? Pound has been pretty weak. So, you know, we're getting some weakness in the, maybe it's going to push below that level. If not, it's going to bounce up here to the resistance point, and this is a place I definitely would be interested in taking a short. Right. For the pound Swiss, we drew this this Fibonacci retracement. We drew it from this low level here to the high level here, and we've fallen through the 23.6, the 38.2. We hit our 50, and we're about halfway to our 61.8. So I have a lot of faith that this might continue on and hit the 61.8. If you're in this trade, you definitely want to maybe break your trade even somewhere below the 23.6 or the 38.2 so that you don't lose any pips should the price suddenly go back against you. Forex can be volatile like that. It can move against you pretty quickly. So you just want to protect yourself. It's just using the orders as tools to help you achieve the goal of putting money in your pocket. Looking at the pound yen, we've got, you know, same thing we've had with all the pound trades. We've got weakness. We're down about 3% on the month. And then for the week, it's not far behind. It's about 2.65%. And for the day, we're down 0.25%. Got a lot of red here. Red candles going on here, 3 daily red candles in a row. So far, it's kind of a sharp move to the downside. It's pretty typical of the pound yen to move pretty strongly. So if the market is rejecting the upside right now, the pound yen is going to definitely have some strength here. So if I'm trading this to the downside, basically Fibonacci retracement from this level to this level. That's how I'm going to draw it, from low to high. And then I've got my levels, all right? Simple. On the pound US, same thing. A lot of red on the screen over here, down 3%. For the month already, down 2.39% for the week. The daily is down as well too. So I've got all these arrows pointing to the downside. I'm not going to bet against that. I'm not going to look for a trade against that. that. So I'm going to expect this to continue. We did hit our 23.6 here. And so at my expectation that we're still going to just head to the downside here. Might get a little bit of a breather because it is the 23.6. Other than that, I just feel like we're headed to the downside here on the pound US. As far as the New Zealand CAD, we took a look at this. Yesterday, we were talking about some of the support and resistance kind of lines here. This used to be a resistance point. We've kind of broken through that now, but we've got some green on the screen. We got a couple green candles growing. So maybe we go back and at least test this line here at about, what are we at? 87.79 and a half. So we'll say 87.80. We're going to test that as a resistance point. If it does not hold as resistance, then maybe our next stop is going to be down here around the 85.99, 86 area. So at least for that, then, you know, we'll see from there where we go. But right now, just looking at the monthly change, it's not super huge. It's only down 0.21%. Weekly, we're only down 0.10%. The daily change to the upside is only up 0.07%. So right now, it's not extremely decisive because we're just kind of bouncing around here. But if I'm trading it, maybe I'm looking for a trade to the downside. New Zealand Swiss, same thing, not a lot of decisive numbers here except for the weekly. The weekly's down almost 1%. For the month, we're not down a whole lot, so we're just really recovering some of the month itself. And then for the daily, we're up almost 0.1%, right? We're at 0.09. So if I'm looking at this particular trade, we were looking for a reversal. So a retracement really from this top to this bottom. And then we would have bought in at the 23.6 here, the 38.2, we would have entered here. We would have hit our 50 and our 61. So far, we're just hanging around here around the 38.2. I don't typically go in again, even though it came down here to hit the 38.2. I feel like the move's over. That's not really my strategy. It's not what we do when we're looking for the retracement. So I don't go in here and say, okay, well, let me get some more of those. You know, I don't think that I want to pile that order on. It might ruin the trade that we did have. You know, we might end up losing more than what we gained on the trade itself. So I don't want to go back in a second time on that. Looking at the New Zealand yen, we've got a lot of red on the screen. For the month, we're down 1.5%, 1.58. And then for the week, we're down 1.71%. So the week has not been good. You can see here we had a nice big red candle yesterday after another one on the day previous. And we're just in this range that we drew. You can see this resistance line and their support line just as we go to the right here, and it held true. So our resistance held true here, and we're headed down here to support. So if I was doing anything, I'm looking to buy here at support. If I'm looking to buy, I'm looking to sell up here at the top. For the New Zealand Singapore dollar, this is not one that we look at a whole lot, but we'll look at it today. For the month, it's down 0.77%. For the week, down 0.87%. So a lot like the other pairs that we've seen. We've got a little bit of a breakout going on here, breakout bounce opportunity. We had this peak. We bounced down here, went back to make sure the peak is going to be, you know, at its resistance point to make sure no traders really want to trade past that part. And if they don't, then we should start to head the other direction. So if we went in early, we would have been in here, maybe at the top of this particular rectangle. That's what, 91.57 or so. And then at the bottom of the rectangle, we'd be just in this trade at the 90.67 level. So if we're looking at this, I'm looking for maybe a trade to the downside based on the breakout bounce. As far as New Zealand US daily chart goes, today we've got a little bit of green going there. So we're up 0.09%, but for the month we're down 1.61%. For the week down 1.43%. I don't think that changes. I think that we continue to head down here. So there's weakness definitely there in the New Zealand dollar, and the dollar for whatever reason is gaining some strength right now. Pretty much, you know, we talked about our Dow being down. If that continues, if we continue to have bad days in the stock market, then maybe we're going to start to see more of this movement to the upside for the dollar and the other currencies actually coming down. So those are the major currencies. Anything that's tied to the US dollar is a major. So you guys will learn that in your class that you take online and on on the website, right? So, go to the course catalog, start taking that course so that you understand the terminology, because as you can see, there's a lot of charts here to get through. So I can't stop and explain everything. So I want you guys to be up to speed on the terminology, and then, we can ask questions and tweak your thoughts on it from there. But you need the foundation. So, I'll always encourage you guys to go to the website and utilize the training that's available for you. For the US dollar CAD, we talked about getting a little bit of strength in the dollar. It's not exactly exuberant at this point in time, but we are getting a bounce here. All of our changes are in the green. So our monthly is up 1.48%. Our weekly change is up 1.36%. And on the day, we're up 0.02%, slight move to the upside. This could turn into a red candle here. We'll have to see what happens here. That wick is kind of showing me maybe we haven't decided whether we want to go forward yet. But if we do, we're going to play this retracement in the 23.6 here in black and the 38.2 here as our entries, and then our exits up here. That's what we would look at. But we were comfortably in the zone before, so maybe we're just going to be in the zone here, right, between these two red lines. All right, let's see what the US dollar Swiss says. For the US dollar Swiss, we are up 1.5%, 1.57% actually for the month. And for the week, we're up 0.5%. For the day, we're up 0.01%, being a lot of green on the screen. Maybe looking at this Fibonacci that we drew, we're getting closer to our entry at the 23.6. I'd be interested in taking that particular trade and then letting it play out to see what type of reversal we get. The 50% is definitely looks like something in range for us, and maybe the 61.8. On the US dollar yen, we talked about this yesterday. We've kind of got this trend to the downside, just kind of meandering off to the right, but to the downside for sure, getting lower highs and lower lows as well. But we started to kind of taper off here. If you can see this, I'm going to draw here. We've kind of, tapered off here. We've got basically a little bit of a pennant too, now that I draw that there. So we got these these lows actually coming in a little higher, right? So when that happens, then that means that maybe there's a little change in the sentiment. Even though we're coming down here, the highs are, the tops of these candles are coming down, or this resistance point is coming down. Our bottom is coming up as well. So it's going to end up in this point and then break out one way or the other. Being that it is the US dollar, my first thought is that it'll break out to the downside, especially if there's no news or anything that's going to really be positive for our economy. And if the Dow keeps falling, however, then maybe this goes up. So if the Dow recovers, then maybe we fall down below. So if I'm taking a trade here, I'm just looking to sell maybe on this trend line here. So maybe this is the time to do that. But know that this is right out there in front of you. This other trend line is out there in front of you. If you want to go maybe below that, maybe you want to, be a little conservative, you can wait till we break below this trend line and then take that trade. Okay. So that's the overview of our technical charting. Some of this is going to be a little redundant if you come back, but it's good to kind of see it as it develops. We're looking at some daily charts here, so some of it's going to look the same, and that's good. That's kind of by design by me, just because when you come back, I want you to see what we've done before and then be able to just add to the knowledge that you had. And then if you have questions, it's probably going to be, it's going to look the same, and I won't have to go back and kind of understand what it is that you're asking. The charts will be the same. We're going to see them quite a bit. And then we'll just day by day add a new candle and make an assessment. So I appreciate your time coming out tonight and listening to the show. For those of you that are catching it on the replay, I appreciate that as well. Definitely utilize the shows and the information in it to try to help you with your trading. That's definitely what we're here for. So once again, I'm Derek with iLi Academy. I enjoyed my time here tonight. I will talk to you soon. Have a great day. Bye.